All right, we're going to explore a really unique corner of the financial world today. We're talking about a special tool called the Trust Charter. Now, it's a special kind of bank, but here's the thing. It basically breaks the one rule we all think about when it comes to banking.
So let's just start with this question. When you hear the word bank, what comes to mind? Probably loans, checking accounts, credit cards, right? But what if a bank's main job was something completely different? What if lending money was just not what they did at all?
And that's exactly where the Trust Charter comes in. Its entire purpose is so simple, but it's incredibly powerful. It's built for one thing: custody, not credit. Its whole reason for being is to hold and protect assets for someone else. That's it. Now, to really get what a trust charter is, you gotta look at where it came from. It wasn't just invented out of thin air. It was born from a very real, very specific need a long time ago. So let's rewind a bit. Trust companies started popping up way back in the 1800s, and they were solving a huge problem for wealthy families. You know, how to professionally manage big estates, handle inheritances, and make sure wills were executed properly. Now you fast forward to today, and these have evolved into federally chartered trust banks, and they operate under the very watchful eye of the OCC. That's the Office of the Comptroller of the Currency. They're the main regulator for national banks. So what's the blueprint here? How are these things actually built? Well, the structure is incredibly focused. You could honestly say they are lean by design, built to do one single job and do it really, really well.
And this right here is the absolute heart of the whole thing. Fiduciary duty. It's a huge deal. It's a legal and an ethical promise to always act in your client's best interest. This isn't just some nice-to-have guideline, it is the bedrock of the entire trust charter model. Everything is built on this.
The difference becomes crystal clear when you put them side by side. A traditional bank's mission? It's commercial. It takes in deposits and it makes loans to turn a profit. But a trust charter, its mission is pure custody and asset protection. It doesn't take deposits, it doesn't make loans. Its core principle isn't making money for itself, it's that fiduciary duty we were just talking about.
So these principles lead to some very specific features. Because they're flat out forbidden from taking deposits or making loans, they get to be exempt from some of the really heavy capital requirements and regulations, like the Community Reinvestment Act that governs lending. And this super specialized lean structure, which, by the way, is still supervised by the OCC, is exactly what makes them the perfect tool for wealth managers, for family offices, and, as we're about to see, for a whole new generation of fintech companies.
Okay, so all this talk about 19th century estates and wills might sound a little old-fashioned. But believe it or not, this charter is having a massive comeback in the 21st century. It's finding a brand new and totally critical role in the world of digital assets. So, why now? Why is this old idea suddenly so hot? Well, it's because the Trust Charter offers a clean, clear, and most importantly, an established regulatory path. For modern companies whose whole business is about safeguarding customer assets, not lending against them, this charter is, well, it's a perfect fit.
And that brings us right to the cutting edge. Think about crypto custody. Companies absolutely need a regulated way to hold digital currencies for clients. Or what about embedded finance? You know, when a non-bank, like a shopping app, wants to offer some kind of financial product. This provides a pathway. And for tokenized securities, where real-world assets get represented on a blockchain, it offers a trusted legal structure. The Trust Charter is the quiet framework that's making all of this possible.
So, as we start to wrap this up, let's just circle back one more time to the single most important idea that really defines what a trust charter is all about.
It really all comes down to this. It doesn't matter if you're managing a 19th century family fortune or you're safeguarding a modern portfolio of digital tokens, trust banks operate on one simple, unwavering principle: a duty to the client. That is their entire purpose. That's the whole game.
And that kind of leaves us with a big question to chew on. In a world where our assets are increasingly just lines of code, digital, intangible, virtual, is it possible that the legal and ethical promise of trust will actually become the most valuable currency of all? Something to think about.